Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another live stream. We've got some big stuff here this week. Actually, a really big week in the markets. Seems like we've got a lot of those recently. But this week we have CPI numbers. Last Friday, of course, we had the NFP report. And markets are moving here. Just a quick look at the overall kind of... actually, you know what? We'll do our all markets view just for a second, just to take a look at where we're at starting out the week. We've got gold higher. Gold absolutely ripped on Sunday open and continues to be a serious market mover. Meanwhile, the S&P 500, Dow Jones, NASDAQ, and Russell all starting out the week with some gains. The dollar index actually, was this Sunday? Yeah, it was. Dollar index actually gapped higher, filled that gap, and now sort of holding steady. So dollar index looking interesting here this morning. You've got oil continuing to push higher up to 72.40 or so. And then Bitcoin all over the place. So interesting start to the week. But yes, markets are moving already. You've got, again, S&P up about 0.5%, NAS up about 0.8%. You've also got gold up 1.5% here this morning, guys. 1.5%. That's a pretty substantial jump for the price of gold just to kick off the week. You've also got silver looking good. And I'm loving the metals, but not really at a place where I can actually take a trade on them. So I'm just going to go right to where I am looking for setups, which is going to be gold. I do like gold quite a bit to the long side. Love the technical setup, but I can't justify doing anything here. And I'm going to go ahead and predict something here. Most likely this week, I'm not going to get any entries on gold. And most likely this week, I'm going to say the same thing 700 times, which is I like gold long, but got to wait for pullback. I'm probably going to say that 5,000 times, and that's okay because I repeat myself very frequently on this channel and stream because guess what? Trading is just repetitive. Trading is incredibly repetitive when you're sticking to a system. So I am interested in gold. I know there's going to be people out here. Let me tell you right now, there's going to be a lot of people who say, I'm going to short this back to this pullback because it's going to pull back. Now, when you see me draw this idea of like, oh, I like longs if we get to the 38.2, I am not, and absolutely adamantly pointing out that I am not saying, oh, I think the market is going to go down and then I'm going to buy it because then I think it's going to go up. It's a small delineation. I don't even know if that's the right word, but distinction. I don't know. It's very important that we understand something. Just because you might be bullish on something does not mean that it has to pull back after a big run. And you're going to hear a lot of people say, like, oh, markets, they move in waves. So why don't you trade the wave back down? This has been the age-old debate and argument on trading world communities forever. Should you trade the pullback? And you should trade what you do and what you backtest and what you find profitable in your trading style. Look, I don't know if gold is going to pull back. We might not get a pullback. And that's a very important distinction to make. What I'm saying here is if this thing rips to 3,000 and then pulls back, we may never come back to this level. We may, in which case that gives me an opportunity. We might. Never say never. Markets are not fully predictable, right? Markets are actually incredibly difficult to predict. You could have something that comes out this week that absolutely tanks the price of gold for a couple days. But I'm going to look for an opportunity to get long gold if it gives it to me. And if it doesn't, I'm gonna tip my hat and say congratulations to the bulls, but I am not in that trade. That's just part of it's trading 101. Sometimes you miss moves. I like the idea long, but only if it gives me an opportunity if it gives me a stop at the station, I'll get on the train. But if it doesn't, there's nothing to do there. Stop, you're not getting the pullback. I might not. Again, if it gives it to me, but also equally foolish. Let me just be fair. I said I'd be an interested buyer if we do get a pullback, but I said I don't necessarily think we're getting one. It would be equally foolish to say we're certainly not getting a pullback. That would equally be foolish. The thing is, no matter how strongly you feel about, oh, gold is bullish and it's going to the heavens. Okay, great. Doesn't matter what you think or feel. The market's going to do what it wants to do. So even if gold is very bullish in the next 6 months, you could still have some big drops in the meantime. That's what makes trading difficult, is markets are not as predictable as people think they are. I always say that. A lot of people think trading is hard because psychology is hard. A lot of people think trading is hard because, they get in front of themselves and they mess up. That is, if you can't control your discipline with trading, then you're just lost to begin with. But let's just assume you have decent discipline, which is the bare minimum to actually become a profitable trader. Okay, so we put that behind us. Let's say you are a disciplined trader and you wait for the right setups and you don't mess around, you don't gamble, whatever. It's still very difficult to become profitable. Why? Because markets are less predictable than you think they are. That is the reality. That is the hard part about trading. Markets are less predictable than you think they are. Okay? You love a technical setup. Oh my gosh, when the candlestick does this liquidity grab and I'm going to buy then sell it here, and markets are less predictable than you think they are. It doesn't mean they're not ever predictable and that you can't find a setup that makes good logical sense and that the risk reward makes sense. But what I've found over the years of doing this, years and years and years, what I found is good trading is optimizing risk to reward. It's not being able to call what the market's going to do like some sort of god or wizard or genius. I cannot reiterate how important what I just said to you is. I've done this for 8 years or something like that. Since 2016, 2017, I've been obsessive with markets, spending all my time studying and learning about the markets. It's what I love. I love doing this. And what I can tell you is so important if you want to become a more profitable trader or investor. It is not about knowing what is going to happen tomorrow that makes you a profitable trader. It is about heat seeking, like a missile heat seeking, risk to reward. That is what matters. You don't know what the market's going to do, but you can optimize your position sizing and you can optimize your risk to reward on trades that you like. Does that make sense? Hopefully that stuck with somebody out there. I always think about that. If that message got through to one person, if someone wrote that down, they're like, oh, it's all about risk reward. It's not about being predictive. that's a takeaway that I've gotten, after years of intense study of this stuff. Yeah. So, with that said, how do I approach the markets then? If they're not as predictable as you think they are, which again, I will say that over and over and over, the fault of the retail trader is believing that markets are super predictable. Someone out there thinks they so desperately believe that gold is not going to stop. It's going to do this. And I know it's going to do this. And that is what gets you into trouble in trading. I'm telling you what, that right there, that mindset, I've been there. I remember thinking like, there's no way that the market does this. And with the second you catch yourself thinking that way, you're toast. You're done. You're burnt to a crisp. Because what happens is when you're overconfident about what you think is going to happen in the markets, you over risk, you beat yourself up when it doesn't work out inevitably, because the markets just do not do exactly what you think they're going to do all the time. So again, there's some Monday morning painfully learned wisdom from myself. I'm not, when I'm telling you these things that I've learned, I'm not telling you like, oh, I'm just a genius and I never made mistakes. And I'm telling you from painful mistakes myself, I'm telling you some of the things that I've learned. So hopefully that stuck with somebody. Again, those are things that I paid dearly for in my years of trading. So maybe take that free lesson and don't lose that money. Bro, stop talking and show some setups in your bias. ADO, you might be toast already, my friend. Again, if you're just looking for the quick burst of give me a trade signal, you might already be cooked, my friend. Why is dollar Swiss null in the edge finder? Ooh, that's probably an error on the, yeah, something is still loading. What that means is if you ever see a NA or null reading for a symbol, it just means that a data point is being, that a pull of data failed, and that on the next cycle, usually every 15 minutes, it should be fixed. Usually, if it goes too long, let us know and we will happily fix it. So I do like silver and gold. I just got done ranting for 10 minutes about this, but that is what I'm looking for, is some pullbacks on silver and gold. I actually think I like silver a little bit more than gold. I've got this 38.2% retracement. I may be interested in the setup if we can get there. If that happens, attempt number one would probably be around the 38.2. 61.8 would be a pullback further. So I do like that. We'll see. It is the kind of guy that risks 20% per trade. Hey, I think you're playing into the joke, and I respect that. Tell me if I should press buy or sell. I hope you're kidding. If you're not kidding, then seriously, find God. But Russell index pulling back here. I still really like the Russell for this year, but it is pretty contingent upon some dollar index weakness coming into the picture in some part of this year, and yields falling. Speaking of yields falling, we got some yields coming down here this morning. I'm long TLT, so I would like yields to continue to come down. I'm also bullish on the Russell, so I'd like yields to come down. I don't want yields to crash down, which would indicate, oh my gosh, the world's afraid of a recession. But here's the thing. I want you to. Here's something we need to discuss. Okay, fundamentally, tariffs, right? People are terrified of tariffs. You know who's not actually afraid of tariffs? You know who's not afraid of tariffs right now? Because last week we got University of Michigan's inflation readings, right? UMich put out an inflation spike. It caused the market to freak out on Friday. Do you know who's not afraid of tariffs right now? It may surprise you. It's the bond market. The bond market is telling you, while everyone is freaking out about tariffs being, oh my gosh, inflationary, they might be, but the bond market's pretty smart. And the bond market is not, if they were really scared of tariffs, like really, really scared, you'd be seeing this. But you're not seeing this. Look at that. So this is very interesting. Now, it doesn't mean that tariffs are not going to be inflationary at all. But what markets do is they get really scared about stuff. They almost like overshoot in both directions. They panic about Trump's going to be super inflationary, and then what happens is the market says, well, maybe he'll be a little inflationary. That's kind of what we're seeing happening. That's my oversimplified view of the 10-year government yield. What does this mean? Again, if you're a junkie out there and you just want buy and sell signals on this stream, this is probably not the conversation for you. But we are talking about the true forces that are moving the price of gold higher, right? If you want to talk about gold, if you're a gold trader, if you want to talk about stocks or indices or the dollar, this is really important stuff. So this move here was before Trump got into office. This move here is after he's gotten into office. So again, I'm not necessarily saying that the tariffs that Trump is proposing will not be inflationary. They probably will be. Most economists do think that the tariffs will be inflationary. But perhaps the market itself is saying, well, they'll be inflationary, but not as much as people thought. This bodes well for my TLT position. It's part of the reason I am long. The market gets panicked about stuff. It gets absolutely panicked about things, and it overshoots so frequently. You know, I get the whole like, oh, markets are highly efficient and they're perfect and stuff, but emotion is still in these charts, man. And the thing is, there's a lot of people who just think, you know, they got all sorts of, put your thoughts of Trump to the side for a second and just recognize something. People are scared of what could change and what could happen. And they typically, at least in my years of looking at this stuff, they tend to overshoot how good or how bad something is going to be. So TLT was a trade that I liked. It goes alongside the yen kind of concept. If you guys are regulars, you know that the yen has actually been getting some very bullish readings on the Edge Finder. Now, of course, it's being read as very bearish because why? It's saying bearish pound, bullish yen, right? You have to flip it around for currencies. Bearish CAD, bullish yen. Bearish dollar, bullish yen. Bearish Kiwi. For the currency traders, that's how we read that, right? So some yen strength. Why am I pointing out the yen in relation to TLT? Well, I've been talking about this a lot. TLT and the yen are very correlated. I'll do my quick thought experiment that I've been showing. Check this out. We're looking at JXY. This is the Japanese yen currency index. Keep your eye on that for a second. I'm going to switch the chart on you. Ready? Here's TLT. See that? They move pretty closely together. It is a bit of a risk-off play to be long TLT or long Japanese yen. But there's a bit of something, there's something in there that I want to discuss. The Japanese central bank is talking about hiking rates for the first time in quite some time. They're really aggressively trying to get hawkish. Meanwhile, other central banks in the world, key Western countries like the UK, the European Central Bank, and the US Central Bank, the Federal Reserve, they're all talking about cutting rates. So that divergence looks really interesting to me. I'm not necessarily bearish the dollar, but I am kind of cautiously bullish the Japanese yen. So with that bullishness on the Japanese yen, like I said, I bought TLT. I continue to have a position on this one. US stock market just opened up, so we're getting some increase in volume. Let's take a look at that. Really choppy stuff here for the indices. You'll notice too, if you are an Edge Finder user, that we've got no indices currently on the bullish side at this time. In fact, our watch list has really thinned out here to start the week, keeping things pretty simple here for us. But I still like silver and gold, looking for pullbacks on those. So my job today as a trader is pretty easy. I'm gonna continue to watch that TLT trade, which is a play sort of on the Japanese yen. I'll also look for the currency pairs to trade into some levels I like, but I'm trading TLT. I'm also looking for pullbacks on the metals. Other than that, I don't really have much going on. So, yeah. So I like the Japanese yen play. I'll be looking for that. NAS actually holding up really well here today. Look at this. NAS up 0.9%, almost a 1% gain. That's following a pretty steep sell-off on Friday, but this market just choppy, man. Just not decisive at this time. Again, I'd like to see a more decisive breakout to the upside in order to get long, or a larger pullback, in which case I'd probably sell some puts on stuff that I like. to hold longer term. I put together a little fun watch list in my list here. Where's my watch list? Stocks, ETFs, retail stocks. How can I? Where's my open list? There it is, investments. Let me add that to list. Okay, so I put together this list here. Look at that, Nvidia's up nicely today. I have an Nvidia trade that's going really well. These are all things. Everything on this list is stuff that I am possibly looking at for super long-term plays. Tesla, I've owned Tesla off and on for years. I've traded in and out of Tesla for some time. I might actually get assigned on these. What is this? February 28th puts. Very interesting. What's TLT? TLT is a bond market ETF. So basically, is it a collection of bonds essentially? So why would you trade bonds? Well, if you are somebody who watches the Fed and central banks and macro stuff, bond traders are like the most boring, but also I love like focusing on yields and dollar and macro stuff. It's one of my favorite things to trade. I trade, what I trade the most is probably NASDAQ and gold, S&P, Dow, Russell, silver, oil, Bitcoin, TLT. I mean, that's what I trade the most. I also trade some currency pairs, but it is a minority of what I actually trade. What I love about TLT, one of my favorite things about TLT, guys, if you are somebody who likes to trade, if you are really like me, you focus on the US dollar, you may or may not realize this, but TLT might be for you. You know why? Think about this. If you want to trade the dollar, what can you do? Well, you could go trade the euro against the dollar, but now you've added another piece to the puzzle, right? You've added the European economy to the picture. If you do pound dollar, you added the UK to the US dollar. Now you got to focus on the UK and the US, or Europe and the US, or Japan and the US, right? You have to focus on both. What I like about TLT is that it is a bit of a, not by a ton, but it is a slightly more, because TLT bonds are still, global focus, but they're very US centric. And I like that about that because I focus a lot on US data. It's just what I study the most. And because I focus on US data so heavily, I like TLT because typically this is very responsive to US economic data. You see what I'm saying? You mostly trade bonds? No, I do not mostly trade bonds. Bonds are just one of the things I trade. I trade a lot of things. I trade indices, commodities, currencies, crypto. I trade pretty much everything. Yusuf, thank you very much for the $10. I really appreciate that. Donation to the stream. That's awesome. Appreciate you. Is an ETF for the long term, and how can you profit from them on the short term? Must I put in a lot of money for short term as it moves a couple of pips? Options is great, but really not my cup of tea. So ETFs are what I trade the most by far. ETFs are simply, you can invest in them, you can trade them. They offer low trading costs, right? So for example, if I buy SPY, if you trade SPY on a CFD brokerage, right? So if you're out there and you're trading NAS 100 or SPX500 on a Forex broker, you pay a lot of money in swaps and fees. But if you trade SPY on a stock brokerage, there's not leverage involved unless you go the margin route. But what's great about this is that the expense to trade SPY and hold this for days and days and days, if I'm swing trading it, is like nothing, right? So it's very, very small. That's why I trade ETFs. It is a cost-efficient way to swing trade. You can also do futures, but again, I've just always loved trading ETFs. It's what I use. Now, you're trading the same thing. It doesn't matter if you're trading futures contracts, if you're trading ETFs, if you're trading a CFD brokerage, you're trading the S&P 500 or the NASDAQ or gold. It doesn't matter your way of doing it. These are just different ways to trade the same thing. So I just prefer to trade ETFs because of the low trading costs, and for swing trading perspective, it's pretty perfect. Yusuf, again, I appreciate the $10 donation to the stream. That will go towards, I always say, if you donate to the stream, you know what it goes towards? Every single time it goes towards our coffee at the office. We're in a studio office here in Atlanta, Georgia, and we go through a lot of coffee and a lot of, what do you call it? Seltzer waters, like LaCroix stuff. We drink a lot of that. So appreciate it. You're funding the office kitchen. Thanks again. Bitcoin pretty flat here recently. Not really getting, I mean, this is interesting divergence here today, guys. Look at this. NASDAQ is up 1%. Russell is flat. Dow Jones just pretty much flat. S&P 500. I mean, this is definitely, there's some tech stuff going on. SMH, I'm also long. Look at that. Let's go. SMH up 1.8% here today. Love to see that. SMH, this is another ETF. This tracks semiconductors. This is like the neighborhood of NVIDIA, AMD, Qualcomm, Broadcom. With this one ETF, I'm able to trade a bunch of things. By the way, if you'd like to check out the same stock brokerage that I use, which is Webull, we'll drop the link here in the chat. You can check them out and sign up with them if you're in the US, UK, Philippines, Singapore, a couple countries, not everywhere. If you're not in the US and you'd still like to trade stocks, indices, all that stuff, definitely check out, we'll do 8cap. Check out 8cap. 8cap has something really cool with us. They actually offer the Edge Finder for free to people who sign up and deposit certain amounts of money. If you're interested in getting a free copy of the Edge Finder with a deposit to 8cap, we'll drop a link here in the chat to where you can get more information. You can speak to our team. That is something that we have set up. So you can actually, I think if you deposit like a 10K account with 8cap, you can actually get the Edge Finder completely free. Now there's nothing free in the world. You deposit the 10K, 8cap actually buys you the Edge Finder. That's how that works. So if you're interested in that offer, just a heads up, click this message, connect with someone on our team, and they will get you some information about that. But if you're willing to make a 10K deposit to 8cap, and you're outside of the US, of course, that's non-US people only. 8cap's a brokerage that, has sponsored our work for years. They're a wonderful group of people that have been super supportive of our stuff here. You can get a free copy of the Edge Finder with a 10K or more deposit to their brokerage. Find out information using that link in the chat right now. Actually, could we also drop the chat with us link, Chandler or James, just so that people who would like to communicate with our team about that can do so? Why are stock indices flying even with tariff news? Well, they were down heavy. I mean, they're not really going anywhere right now. So you have to think there's a lot of positives and a lot of negatives in the market right now. There's positives in the form of earnings season was pretty good across the board. You have a Fed that still wants to cut rates overall. There's some positives in this market that have continued to bolster the bull case. But at the same time, right, if I'm looking at this and I'm saying, well, tariffs could be inflationary, they could be scary. So there's forces. We're just seeing a choppy market. All we're doing today is just recapturing some of the losses from Friday. We're just choppy, we're just range bound. Now, if we see NASDAQ do this, right, and there's some big catalyst that breaks us through the highs, that's something worth noting. But right now, we're just really choppy. We're really back and forth. Wendy, how long you been trading for, Nick? I've been trading for like 8 years. Why don't I trade futures? I just love ETFs because I can niche down to exactly what I want to trade. Like I just talked about, I have a SMH trade right now, which is semiconductors. With futures, I can't trade a semiconductors ETF, right? So I trade a lot of ETFs. I also do options on stuff that I'm trading. And you can do a lot of stuff. You can do options on futures as well. But also the trading costs, holding stuff through contract expirations. I'm just not interested in doing that. I prefer trading ETFs, and I just always have. So it's just personal preference. I mean, I'm also a swing trader that holds stuff I can hold stuff for 3 weeks. So I don't need to be like super worried about gaps here and there. And, sometimes the gaps are in my favor. Sometimes they're against me. It's just part of the process. And you can also get gaps in futures. We saw that last week and the week before. Huge gap down in indices if you held stuff over the weekend. So anyways, guys, we've got up next, we've got Ivan joining the call. We're going to take a look at some stuff with him in just a moment. What I want to encourage you to do is, like I said just a second ago, if you're interested in getting the Edge Finder for free with your 10K or more deposit to 8 cap, send us a direct message on our website and we will get that hooked up for you. We dropped the link a moment ago in the chat, or you can just go to a1trading.com and chat with us in the bottom right. Okay, quick break, and then we'll be up next with Ivan.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back with Ivan. Hey, Ivan, how are you?
Good. And you?
It's good to have you back. I'm doing well. Ivan, talk to me a little bit about this week. We've got a pretty big week in front of us. We've got CPI numbers, the producer price index numbers. Powell is speaking a couple times. You got the sunglasses on. Clearly, it is a big week. That's how I know it's a big week. Is if the sunglasses are on, we got something cooking. So set us up for this week. What are we watching for?
Inflation. Does it go higher? Does it go lower? And I don't think that Trump's kind of impact on the S&P on the inflation is there yet. But I'm definitely watching the dollar index, and has made like a small little bullish attempt to a reversal. So that's what I'm looking at this week. Okay.
Yeah, no, I mean, inflation, the Friday University of Michigan inflation forecast spiked, causing, some dollar strength and some worries in the risk asset department. Do you think that is worth really paying attention to, or is it really just all about CPI this week?
I think it's all what do you call it? It's all a bit of a sum in summarium, if that is even a word in English. It's what do you also we have a bit of issues. I'm just going to find the heat map. So we have quite high relative CPI. We have somehow elevated. Okay, not that much, but still, the NFP on Friday was above 100K. And then you have core CPI, and you have other things that and even manufacturing PMI and services PMI are all above 50. So we still have a lot of bullish, in my view, bullish indicators for continued dollar strength.
Yeah, I mean, that's the thing is this week, and little tricky component of this heat map too is you actually, if you're a dollar bull, you want all of the inflation readings to go red, which would indicate hot inflation. It's a little bit confusing because the heat map is specifically built for if you're looking at this and you say, okay, this data going hotter, PPI year over year, core CPI, CPI year over year, core PC. If these numbers came in higher than expected, these would actually turn red, which would be bearish for stocks. That's the way to read that. Is this bearish for stock, but it would actually be bullish for dollar. So yeah, no, I mean, that's the thing we want to look at here, guys, is this heat map has been changing colors pretty aggressively. We've seen a lot of stuff go from, it was pretty much all blue the other day. And now we've seen GDP numbers kind of slip in. You have services PMI last week was a big miss. Retail sales were also they were soft. And then you had jobs numbers came in a little bit light for the headline. We're missing revisions here. I'm considering adding revisions to this page. And then, we have also unemployment claims that was pretty much flat. ADP was a little better than expected. JOLTS was light, but just going through this, you can see it's more of a checkerboard than it was a couple weeks ago. A couple weeks ago, you just had clear dollar dominance. Now you can see the chart has actually reflected this mixed sentiment. We've now just gone sideways, chopping around for the dollar index. So I agree with you. I mean, this week is all about inflation. If you get a really strong inflation number, meaning higher than expected, it could relight the fire here a little bit for the dollar bulls.
Like, also, what I mean, and I have to add that to your analysis is, yes, we have the actual number, so we have the expectation. That's just for that day. That's the burn for that day. But if you go overall, you still have average hourly earnings is about 4%, which is inflationary.
Mm-hmm.
You have, for that matter, an employment rate at 4%, which was more people got a bit more jobs. And non-farm payrolls, and the revision was from 256 to 307. So that was a 50K uprise
Mm-hmm.
to me, which is bullish. But then this month was only 143, a bit less than expectation. But that's a low number, but still within whatever we have, still within the margins of error as of lately.
Sure. Yeah, no, I mean, that revision on Friday was really worth noting. And a lot of people, there wasn't a ton of coverage on that. A lot of people really quickly focused their attention towards the Michigan stuff, and also the Trump tariffs and the retaliatory tariffs and all that stuff. Everybody kind of very quickly shifted off of jobs. But you made a really good distinction there that I think is important for everybody to recognize. Yes, you missed this red dot, guys. That's your expectations. That's what forecasts were. So yes, we came in light. So you say, oh, we had bad jobs data. But as Ivan just pointed out, this revisions line is very, very important. We revised this number from last period higher. So that gap is actually a bigger gap than this. It's a quick way to read it. We actually net had a lot of jobs gain. So jobs data was pretty strong, I would say. And you also mentioned, very importantly, the wage growth, and this is what's moving markets here a lot recently, is the inflation concerns. Well, wage growth in the United States is not falling; it's actually staying very strong. So you're seeing wage growth, which is inflationary because more people getting higher pay. That equates to prices of goods typically rising as well. So we've got a story here this week where if you see a big swing and a miss on inflation data, if you have CPI and the PPI numbers come in hot, that could easily spook the market going forward. If we take a look at, let's take a look at PPI specifically, because it has this cool chart. Last time around, we had a light print, meaning this populates as red. If a number comes in hotter than expected or higher, it comes in blue. If it comes in lower than expected, it comes in red. So last time we missed and the market celebrated that. What happens this week if we resume this trend, which was higher than expected than forecast? So very important to watch to see how that impacts markets this week.
Well, this isn't revision time of technicalities, but I have some thoughts about the color choices.
You want to flip into red and for hot?
Yeah.
That actually makes sense.
Might be a bit twisting my mind and brain, at least. But
you want to do it right now? Let's do it right now. I like that idea. Okay, let's go style. Oh wait, no, I gotta move this. Come back to me, Ivan. You do something. I'll work on this behind the scenes.
Okay. So I had a question earlier today. Somebody said that dollar should be bearish out of Friday, and because the employment came lower, the NFP came lower. But there's three things you need to look at, which we are going to repeat many times. One is the number itself. Okay, number one is the expectation versus the actual. That is one move. The other one is the number itself, what does it represent, and what is the overall trend. Because when you had some months ago, you had it was a bit below 50, which was really bearish for dollar. But then now we are up at 300, 143. We have regained the momentum again. Then we are back to being bullish. So those are three considerations. A bit brain wrecking, but that's why I'm dollar bullish, because trend-wise, on most inflation, unemployment, GDP, generally speaking, is generally overall bullish for the time being. Secondly, or thirdly, or fifthly, Trump is still inflationary. Him adding tariffs on steel over the weekend, or what it was,
I saw that,
it's not making things cheaper. If that was a question. But the other point that I haven't thought about before is if Doge can shave off billions in government spending, what's that going to do to unemployment and inflation? I have no answer.
I've thought about that too, Ivan. Also, I can show we just made that switch. So now you're right. That actually feels a lot better. So this higher than expected inflation now populates red, and lower than expected inflation populates blue, which cool and hot just makes sense. So this was a hot reading. This was a cool reading compared to forecast. So that is sorted out. But also, yeah, no, you were pointing out something I want to definitely bring attention to, which is, when it comes to inflation expectations, the tariff stuff, the steel imports, but then also the Doge stuff. Like if they do actually do some pretty mass removal of government spending, that means a lot of potential unemployment. That means a lot less government spending. And one thing to note, I would agree that I think most people would agree, regardless of your political views, that we should probably do some pruning of government spending. However, if you do massive amounts of reduction in government spending is a huge part of this rally. Like the whole part of the reason the stock market has done so well has been the government keeping interest rates low for a number of years, and tons of policies that spend a ton of money that floods into inevitably the big companies in the United States. So, if you do massively reduce spending in US government, could that possibly hit businesses and also cause not only unemployment from people who are employed by the government, but possibly slow down the economy, causing layoffs from companies? There's a trickle effect here.
Yeah. 100%. Then there is direct and indirect. One is that if one family, if both, for that matter, that generally tends to happen, that you find your wife at work. If both have lost their job because both work in the government, then that's a complete loss of income for that family, and of course that is bad for that family. But USA was 1% of 1% of what the government is spending. But apparently, according to Viki, in 2022, 36% of GDP was government spending. So if that is that's the ballpark number, they need to reduce a lot, but it can make it, actually, I would argue, because what did they say now? 10,000 people lost or were told not to come back to work. That's not necessarily only US jobs, but if you do that many times more than once, it's going to be some job losses at the end.
Yeah, no, it is. It will certainly have. That's the way things always tend to work in the economy. It's like whack-a-mole. You like solve one problem over here, and another problem pops up over here, and it's sort of a perpetual, never-ending cycle of you fix one problem and another problem shows up. So we'll have to see. But Ivan, with the dollar index, with inflation concerns, tariff concerns, how are you navigating this? Do you have any trades?
Go back to gold,
right
please.
Now? Sorry?
Please go back to gold.
Gold.
I need to hand in my resignation. I did not believe, truth to my heart, I did not believe that would happen this year.
It's crazy. Gold is flying high. 2,900. 2,905. That's crazy.
Okay. Who wants to have my resignation letter? Because that was not on my bingo card this year. Well, what's the reason? Trump? But because dollar is supposed to be strong, so gold is supposed to fall. But then everyone is now flying to gold for safety, because whatever their business or whatever they're doing now, whatever the governments are now doing, and thinking, hey, how do I save myself from this? And it seems to be the gold digging is happening. Yeah,
I mean, it's certainly not what I expected either. My end of year target for gold was 3,000. So for us to be at 2,906 by February is quite remarkable. I'm not long gold. I wish I was. I pretty much everybody wishes they were, if you're not already. But yeah, no, it's had a really big run up. And this is again, I always point this out. This is why markets are so difficult, is because it's very hard to predict this stuff. Now, you might have predicted this move, but to predict every move is just so very difficult to do. So you have gold up to 29.06 despite dollar strength. I mean, look at the gold chart here, and you would think, oh, the dollar must be crashing. Nope, it's actually holding up quite well at the same time that dollar index or as gold is going up. So really interesting there. On the currency side, euro dollar continues to get pummeled here. Overall, had a little bit of a bounce back last week, rolled over. Pound dollar, same kind of story. Dollar yen actually taking a beating here with some yen strength recently. What are your thoughts on the yen? Are you watching the yen at all?
Yeah, wanted a pullback on the yen pairs this week. I was just told to go to 10-year. I'm just trying to figure out the gold in my head. So two things at the same time. So just to clarify, when I say it's because of Trump, it's the reaction of other countries, other people outside of America flying to gold because they will see less profits, or governments will say, okay, thank you very much. Or other countries would say, okay, we're going to have less trade. How do we secure ourselves? It's not necessarily America as a Trump. It's how do people react to that kind of protectionism, and then they will respond. It's a game of checkers or chess. I want S&P USDN to a bit higher and then fall, but I am definitely on the bullish side. I'm a bit anchored myself for not being a part of it, but that's the direction we are going with the proposed another increase of interest rates this year. Also, given that that we have 2.9 or so inflation going up to 3. In Japan, so we're knocking on the ceiling of we should increase interest rates again.
Yeah, very interesting. And I mean, when we look at the yen and we say this thing has really broken some of the recent momentum, here's a Japanese currency index, breaking out on multiple kind of ways of looking at this. We've got some momentum here to the Japanese yen that we haven't seen in some time. I mean, the yen has just been the receiver or the butt of the joke for a while. I mean, Japanese yen has just been sold. But now that other central banks, I talked about this earlier in the stream, now that other central banks are looking at cut rates, I mean, look at the UK, right? They talked about, they're very dovish last week. You also have the Fed that does seem still poised and wanting to cut rates this year. With some of the recent data, you could still see how that's possible, right? You've had jolts coming in low and several reasons that the Fed may cut rates this year. I guess inflation this week is very important to that story as well. But point is, the two directions are very interesting. Japan looking to rate hike and most other Western countries looking to cut rates. So that divergence creates some very interesting trends in the currency market. Dollar yen, what was this kind of easy passive uptrend for so long, I think is kind of coming to an end. Even if we don't necessarily see the yen dominate currencies for years to come, I wouldn't be surprised if we just enter more of a long-term range environment rather than just what we have been, which was this, like I said, this kind of easy, never-ending uptrend where Western central banks were actually the ones hiking rates and the Bank of Japan was holding steady.
At negatives, by the way. About Trump accusing China of devaluing their currency in Japan. Yeah, China did that as a counterweight during the trade wars to make sure that they still sold goods and services to to America and to Europe. So that isn't a new. That's not a new, new thought. but yeah, I can confirm that was their strategy. So for me, dollar yen lower, yen strength. It's a bit of a emotional roller coaster. I have to agree that it's not as it's always been just by the bottom, and it will go higher by itself. It's a bit more of you just think twice about what you're doing. Because by the way, they're still spending whatever 48 trillion yen a month trying to buy bonds.
Yeah, no, it's a fascinating story, just the divergence between the two places, and we'll have to see where that goes. Another currency pair I wanted to ask you about, Ivan, is the dollar CAD. So dollar CAD just the fundamentals of these two places, right? With the tariffs
Mhm.
stuff being so interesting, do you think dollar CAD has potential room to the upside? I lean a little bit more bullish on this pair specifically because if there is tariff stuff that happens, I think that it affects Canada more negatively than it does the US. What do you think about that?
Absolutely. Canada is a smaller economy, and they are heavily integrated. Any disruption into trade is a disruption to Canada, not because it's an exporting country, and I can't remember exactly how much of the GDP is going to America, but there's a lot of trade. So if that is going to happen, and they target key income for Canada, definitely CAD is going to feel it. Now, my only problem is the Forex prices in it, because we had a shock and then we fell. So I would argue that yes, we are probably going to see. We have to then see, inflation continue to fall, or inflation continue to, growth in inflation and jobs being lost in Canada for me to still believe that theory. Other than it's not big enough of a dent in GDP for it to have an impact.
Sure. Yeah, I mean that's the thing is it's a bit speculative by nature because if you're looking at, the Canadian dollar and you're saying, oh, this thing is going to get crushed, you're also kind of making the bet that tariffs will go into place. We have this countdown period that is going on between, Trudeau and Trump where they basically agreed, let's push this out 30 days, give some time to negotiate, discuss this. And if you're making a huge bet on the dollar CAD going up, you're making the bet that those relations will maybe not go so well and favor the U.S. heavily, or you're making the ruling that okay, the negotiations will go well, but it will still disproportionately favor the U.S. That's just kind of part of that story that's baked into this chart. As you mentioned, this huge pop followed by this massive drop is just indicative of that. Okay, there's a lot of headline stuff in here. I personally prefer this pair to the long side at this time anyways. So I've added a little bit of a long position here. If it does go down further, I may add a little bit more. I do a little bit of dollar cost averaging on this currency pair. So we'll see if we get some deeper prices, and kind of just depends what happens with that story. But generally speaking, the U.S. economy, I favor right now at this time against the Canadian, but we'll see.
Is the COT data correct on this one?
Should be.
Because it doesn't make sense to me.
Let's look.
To have 160,000 less contracts on CAD from one week to another, unless I'm reading it wrong. My brain.
So CAD, they added short contracts to CAD, removed long contract from CAD. On the week over week.
Yeah.
Okay. So that was actually a pretty bearish week for the CAD. They added shorts aggressively, and
okay, there you go. Okay, cool.
Yeah, significantly or slightly reduced longs, significantly added shorts to the CAD. And look at the net positioning on this. Just super bearish the CAD. Number of contracts overall still very much favors from an institutional basis, staying short the Canadian dollar. I mean, that's a 90% short to long ratio. That is very, very aggressive.
Maya, so that's that includes the reaction from last weekend. So that's kind of like what did the market do in that situation? And they added longs, and then I'm not going to say that they are out, but it's a cause for concern to look for an entry at the moment. But over time, it should be potentially the direction that the market will continue to go in, because with trade wars coming back or being reinstated or actually executed on is not good for CAD at all, especially for the fear and especially for what could potentially happen. Secondly, where if Trump goes too hard, he has so far a tendency to cut the next day and say, stop, okay, I'm not going to do it anymore. So it might be a quick break, stonewalled.
Yeah.
hard crash if you try to go with Trump.
Yeah, I mean, it's going to be an interesting next couple of years. That's for sure. With Trump back in office, you had many resumptions already of some of the previous trade wars that he took up. I would say much more aggressive this time around in terms of his targets. Like last time, it was very focused on China, and I think China is still going to be a big focus of it this time around as well. But it's a very diverse list. He's talking about going after EU, UK, Canada, Mexico, China. So very interesting stuff. Interesting to also see here. We've got S&P 500 driving higher here this morning. Same thing with the NASDAQ, despite these headlines. But somebody was asking me, they're like, why are the indices up so much? Well, you have to remember the indices have not gone anywhere for, a couple months now. We are trading right now at the same level for the NASDAQ as we were on December 11th. For the S&P 500, we're trading at the same level as we were around December 3rd. So, you've had a very sideways choppy market as people try and figure out what's happening with all of the Trump tariffs and what's happening with inflation. There's just many headwinds right now that are keeping the market at bay. That being said, we're seeing a little bit of a bounce back from Friday's sell-off. I'm flat on the indices. I don't have any current positions. I'd be interested if they break out, if you get a big catalyst to the upside, looking for pullbacks, or preferentially, I'd rather have a bit of a sell-off down to this area where I could potentially look for some longs and stuff that I like. Ivan, do you have any thoughts on the indices or positions on the indices?
I can give you thoughts. I have a lot of thoughts. My head is very big.
It is.
Now, the reasons why the indices doesn't fall is that higher prices, because this would lead to higher prices, and companies benefit from it. Because what happened in 2022? Well, companies made massive profits. So it's record high, like great, until increase in interest rate happens. So, and then if you look back at 2022, it wasn't. We increased 4 to 5% increase in interest rates, which is quite a lot. We only fell about 37, but we have ever since then gone to 28, 29%. So yes, it might not be fantastic, but it's it might not be. You might not think it's going to be bad for the stock market, but it's actually good for the companies until increased interest rates happens.
Yeah. No, I mean, indices have impressively rebounded following the kind of pandemic here, or not the pandemic, the inflation and rate hike period that we saw here. I think a lot of it was just, a lot of people, when we did have this big sell-off, were thinking that what that would lead to is high inflation, high interest rates. Next would be a recession, and we'd continue, when you have high inflation for a period of time and interest rates are high and restrictive, traditionally, and it wouldn't have been foolish to even think that there's a good chance we do go into a recession. Obviously, with hindsight, you can say, no, the US stock market was way more resilient. AI story came out of the woodworks and just ripped this thing to the heavens. But the point is, there were some valid concerns about inflation and interest rates. And when those kind of fell to the wayside and didn't have those, at least for now, lasting impacts that we see, the market just continued to rip. So where we are currently, well, we've had a couple really good years in the stock market. We've now possibly just entered into a bit of a consolidation phase. We'll see how long this lasts. But, a lot of people think that this has to make a move one way or the other. And I've talked actually about this with Chris Pulver, who's up next on the show. The indices for a long time have been very trendy, Ivan, like very, very trendy. They're typically trending up or they're trending down. Very rarely do indices enter into, in recent years at least, long sustained periods of sideways action. In fact, one of the most recent, really good examples of a range bound index world was this period right here back in 2014 through 2016. You really just had not a whole lot of movement in either direction. but it can happen. So you can see indices kind of just go sideways and trade nowhere for months and years, even on end. But we don't even think of that as a possibility anymore because indices have been so trendy. So I don't know. Maybe we're going to see a consolidation year for the first time in a while. Hard to say.
Can I have one last word? Not the last
Yes,
word.
you can
But
have
one
one
last
word. What's the one word?
I want to short Microsoft today.
Microsoft?
Yeah, because my time still says 1606. Like I am, what, 13 minutes late. Or it's stuck for 30 minutes.
That's a very interesting reason. I have those kinds of thoughts too. Like some company like makes a mistake or something. I'm like, I'm going to short them just because of that.
But this bar, this what do you call it, Windows bar thing hasn't been working the whole day. So I've been restarting and whatever. But yeah, so I don't know. Is anyone's Microsoft working today? Because the same thing happened yesterday on my on another laptop. So that's not my recommendation, but that's gonna be my vendetta for today.
Well, there you go, everybody. Short Microsoft on the basis of your Windows bar not working properly, and have a great day. Just kidding. No financial advice here. We're just sharing our opinions and thoughts on the market as always. Ivan, thank you for joining me for this segment. I want to just make sure everybody who enjoyed that commentary from Ivan, go subscribe to his YouTube channel. It's Ivan FX on YouTube. You can find him there. The link is in the chat right now. Search him up, follow him, subscribe to him. You can also find his coaching services within our Discord server. If you're interested in doing one-on-one coaching, that's something that he offers. Send him a DM, ask him about it. And Ivan, thank you very much for coming on.
Thank you very much for having me.
All right. And up next, guys, we got Chris Pulver taking over the show to talk more markets. Now, I just want to preface, if you're somebody who is interested in a little bit of everything, this might be the show for you. Chris Pulver quite literally trades the most markets I've ever seen somebody trade. He trades more than I do, and I trade a little bit of everything. Chris Pulver trades options. He trades Forex. He trades futures. He trades a little bit of everything. In fact, you'll see a little bit of a preview in this upcoming clip to kick off his show. So stay tuned. Thank you guys for tuning into my part. I'm going to throw the show over to Chris Pulver just after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Let me just double check everything. Yep. So we are sitting with a gap higher, despite some tariff talks. Steel stocks pretty volatile this morning, but the markets are up. We have an interesting mix of news this week, starting with Powell and a 2-day testimony. So today's pretty light news-wise. Tuesday, 10 a.m., you have Powell testifying on monetary policy with the Senate Banking Committee in D.C. That's a 2-day, so Tuesday at 10 a.m., Wednesday at 10 a.m. Then you sprinkle in Wednesday with our big inflation readings. Now, I do want to look at a couple of prints. So 2.9 is a previous CPI. Is that right? Yep. So we went from 2.4 to 2.6 to 2.7 to 2.9. They're forecasting basically a same print here. Previous 2.9 forecasted for 2.9. Does it print 2.9? I would say the market probably has an adverse reaction if it is 3% or greater. But if the market comes in and these economists have been perfectly forecasting like right as forecast, right as expected. So if it's 2.9, that's probably fine. If it's 2.8 or less, I'm sure the market gets a little excited about that. We are within about a whisker of these all-time highs. This is the previous all-time high the S&P has hit, and we're just staying right there. I'm not saying that we have to make this big surge to the upside, but the last time we saw the market get excited about a CPI print, it was right here. This is when the market jumped on CPI, and that momentum carried us all the way up into the DeepSeek surprise. Then the market fought all the way back until we had the tariff surprise. Then the market fought all the way back until we had a tariff surprise. So a lot of volatility back and forth. But this week, do we have something like this that is going to be a gap higher and a push into all-time highs, or is it going to be a gap lower and all of a sudden we're in the same situation where the market's not at all-time highs? I think a lot of the positivity flowing in the markets right now, I mean, look, I'm not going to crap on the AI and this look, AI is growing. I had some interesting screenshots on the podcast this weekend. Let me just walk through some of those. So what else do we have here? We've got some examples of the crypto alt market that is dropping. Corporate profits continue to run while wages are stagnant, and the labor market remains pretty tight. We saw that with non-farm, like we're still printing positive job numbers. The unemployment percentage itself is decreasing. Quits are going down, which means people are just hanging on to their jobs, not quitting jobs, not transferring jobs. So right now, so far for the earnings reports we've seen in these last couple of weeks when earnings season has been picking up, we have a huge increase in S&P 500 companies mentioning the word or the phrase AI. So just that's the new story. If you're not saying AI, you're falling behind. If you're not actually doing something with AI, you're probably falling behind. So this became, it wasn't what was it 2-3 years ago? Everything was about blockchain. If you're mentioning blockchain, you're making money. If it had to be something on forward guidance, just leave inflation out of your transcripts. Anyway, and AI is going to be something that's probably going to move faster than what we would expect. So anyway, just thought it was interesting. Like AI is not going anywhere, but it is a big question mark on how profitable it is. And what we're dealing with front and center is, historically speaking, when the U.S. has been at a 23, 24 price to sales, price to earnings, like high valuations in the U.S. market, it usually underperforms. So, I mean, we've got a couple things that show history's on our side. Last year was a 20+% year performance. Usually that's followed by positive momentum. 2 years in a row, 20+% positive momentum. So we could still have positive drift. I think the big benefit that a lot of people aren't paying attention to would be China. Okay. I think that the whole optics of like, we are going to be in a trade war, all these trade wars. I mean, look, it's a tool. We don't know how bad it's going to be. Tariffs, as far as like having an overall like stranglehold on the economy, it's never really been the case. But nevertheless, I mean, China's up 15%. Now that is the low for the year. So we had our dips as well, but I mean, you compare the difference between SPY, which had a dip here. This would have been January as well. So the SPY has made a nice little run of about 6%, currently sitting around 5%. So U.S. stocks, let's just use the S&P as a benchmark here. From the low to current price, we're sitting up around 5%. Okay. China, from the same low to the same price, you can see it's much better. So China's up 15.27%. Now, this doesn't mean it's like, oh my gosh, China's the best place to invest. It's just follow through, right? I mean, technically we had that big surge in September, and then the market spent all this time just doing nothing but pulling back and giving back a lot of that September hype. But we have some positive flows. We have some animal spirits. There has been, an entire country that's been underperforming. So would you rather buy, an index at, let's say, a multiple of 23 or a multiple of 12? And so I think like the value play, it's like China is a lot more valuable, whether you trust it or not, like it or not. I still like some of the exposure. So, I mean, we've had a pretty good gap up on Alibaba. It's up to 109. So my positions there doing pretty solid, which I'm happy with. We started a dollar cost average into that. So Alibaba is currently up around $6,000. Baidu is up. Actually, Baidu is down, but I'm looking for covers at like the 100 to 105. JD, I could look at a roll again. I've been bouncing that around the last couple of weeks of whether or not I want to roll. Got 1,500 shares of JD. Do I want to roll it right into earnings? I don't know. Probably not. I could get it called away for $39, and I've lowered the cost basis down to like 35 and change. I could do one quick roll on this, and I'd have to go out through the week of earnings. But if the price is going really, really well, I mean, if it's like outside the expected move, then it might be in my best interest to roll it by another week or so, even if I keep the same strike price. But if I can get like an extra 50 cents, I mean, it's $250 per account, so it wouldn't hurt. But anyway, Nvidia is also making a nice comeback too. So we're at 134. We've got a gap fill between this 140 to 142 area. I mean, this is part of the reason I want to time Nvidia right here. Speaking of, I think I have an iron condor that's got to be close to profit. Let me check on this Nvidia. I know I have a ratio spread here. That's a ratio spread that's now up. Okay. I should have an iron condor on Nvidia with highs at the 160 something. Where the heck did it go? Hang on, let me find this in my tracker. Okay, so I'm just going to try to find it here. $160 by $165 call spread, $115 by $110 put spread, collected $1.36. Okay, let me find that trade. So Nvidia. Here we go. All right, so here's my 160 by 65. I'll use this little yellow dot account. So 60 by 65 right there, and then a 10 by 15. 10 by 15 there. Close. I think I'm going to take the profit on that. So this initially was traded in for $1.36. It's showing less than $1 right now. Price is 13 delta, and I mean, that's freaking perfect. I couldn't ask for a better center price. I'm going to take the profit on this one right now. So $1 debit to take profit on this. All right. So let me close these trades up really quickly. Nvidia. There's my 165, 160, 110, 115. This goes out a couple more weeks, but it's perfectly centered. And right now, profit is showing I have minus 78, 99, 105. Yep, about $40 per contract. Okay, so I'm going to take this for hopefully $1. Got filled for $1. Okay, I'm closing this trade down. All right, let me take a moment to close these out. So the 110, the 160 by 165, 115 by 110. Close this out for $1. Filled at $1. Yippee skippy. Cool. 110, 115. Fill me at $1. $1. There we go. That's fine. Okay, I'm just going to get these ready to go. That one's okay. This one's okay. This one is okay. This one should have the iron condor. There's my 110, 15, 60, 65. Close out for $1. Come on, man. Mid price is 99 cents. You freaking filled at $1.01. All right, good. Looks good there. Looks good there. Looks good there. Okay, good. So that trade is closed. Just going to add that to my tracker. So closing for $1 debit. Cool. Take profit. And then I have some ratio spreads. I have some bull call spreads. I have some naked puts that I sold, or cash secured puts that I'm willing to own the shares. So I'm looking to just generate income on NVIDIA. I do have some trades where I own it around 130. I own the shares at 130. The collar is a 135 by, I think it was a 115 or 120. And if I get the stock called away, it's still fine by me. Let me see where my break even is. So right now I own the shares around 127.95. 127.95. So 127.95. If I get it called away at 135, makes 705 per share. But this iron condor is pretty perfect, where there's my low, there's my high. We're right back into the center. My deltas are pretty much perfect at 13 right now, and I'm just going to take the profit. So rather than holding on and hoping that for the next couple of weeks, this trade is still going to stay centered. I mean, if NVIDIA starts to go more bullish and fill the gap, it's going to end up getting closer to my call side. So now that I'm perfectly centered, I'm just going to take the profit. Okay, so that trade's good. That is closed. So let's put that in the old pulver alerts. I'll find that in here in the Discord channel. Good. Got the debit spread. There's my iron. So that trade is posted on the 15th of January. So I'm going to reply to that one and get that updated in the pulver alert section. So that will be a reply. Trade management update. So it's a 160 by 165 and the 115 by 110. We are now perfectly centered again. And enough time has passed for a nice profit. Closing for $1 debit. So it's 38 cents profit per contract. Beautiful. Okay, that was pretty easy. Let's do a little top down here. Currency strength news this week. 2-day testimony from Powell, as well as CPI, PPI Wednesday, Thursday. Last week, a lot of chop on Friday to wrap up the week. Big sell-off on Friday as well. More tariff talk. Gapped lower. Futures spent the entire night fighting back. This is what the futures market looked like overnight. So sell-off on Friday, gap lower, and then fought back immediately. Steel stocks started to see a 25% tariff. The first thing I checked was two steel stocks I've traded over the years, CLF and X. So this is Cleveland Cliffs, which I do have some shares of Cleveland Cliffs, and I'm kind of willing to buy more in the single digits. I just don't know if we're going to get there. I'll keep an eye on this one. And then United States Steel, which continues to go back and forth with Nippon, whether or not we're going to allow a merger or allow a buyout, and apparently that keeps getting struck down. So overall, this stock is still kind of range bound. So the last time we had a crazy big run on steel would have been 07, 08. That would have been like your big value play. I know there's talks of this same type of thing here. It's like this is just a big accumulation, and we start. If we start to break higher, then sure, we can end up making new highs. I don't know if that's going to be the case, though. I mean, this is what I'd be hoping for. We have resistance. We have support. I'd love to see this price either come back in the midpoint or come all the way back down into very attractive support levels, and look for some good upside targets. A break above the highs, I mean, we have to acknowledge it. If the break above the highs is legit, then this support breaks, and you can measure that move from low to high and measure your breakout. So if we go above, let's say 46, I mean, I could get a breakout towards like the 80s. $80 to $90 seems fair. It's crazy how this, ran from six digits to 100 to almost $200, and then it crashed all the way back down to like less than 20. So clearly it's volatile, but something to watch for the value play this year. All right, we've got 0.66% in the S&P. Equal weight is underperforming right now. NASDAQ up 1.3, equal weight up 0.8. Dow, fractions, 0.2. Russell, struggling, but Russell growth, killing it today, 1.26. So US is green. China's looking pretty good. VIX 1 day is down a ton, down 43% on the VIX 1 day, down 3.4 on the 30-day. No real volatility events for me to say I want to jump in and buy anything on SPXY. It would have to be, I don't know. I'm just going to wait. I mean, we did poke all-time highs, but SPXY is still nowhere near it. This is mostly an instrument that I play during VIX events. Dollar index still quite indecisive. So we had that big reaction where the gap was up on the dollar. Dollar got a little bit softer. I am curious if this high holds and we have like another kind of high, low, call this a little bit of a kind of a fake out trade or just a noise. I mean, it was hard, like Friday to Sunday, that big gap in the market, that's hard to trade. But if this is lightly consolidating and then the market breaks to go lower, dollar weakness would be good for the stock market. I believe gold hit all-time highs again today. I think we'll double check that here. Oil, still hanging out with kind of some range trading. I've got an iron condor on oil as well, around $72. Natural gas hanging in there. Still want to see if we get up to fresh highs. Gold, good Lord, man. Gold is on the freaking move. Another all-time high today on gold. Silver, underperforming. Let me take a look at the difference between the two. Okay, so gold versus silver. Gold performing well. Silver's hanging in there. I'd like to see silver obviously take another march higher. Gold is still doing its thing. I'm still enjoying the shares long on GLD, but I haven't added much to it. So I'm just kind of patiently waiting to see if I like anything there. Otherwise, does this gold versus silver, do start to see something where you can time this, where they can both perform well, but does silver start to outperform? Or I guess if gold continues to do well, does gold actually break higher? Maybe gold is the like best flow right now for safe haven. Gold is outperforming the S&P 500. Gold, I think right now is outperforming Bitcoin year to date. So all your gold bulls out there are probably loving this year and seeing, they feel like they've been proven right for the first time in years as they've been watching Bitcoin outperform. Speaking of Bitcoin, we're at 97K. This doesn't really change any opinion. USO, if I'm trading an ETF on oil, probably USO. Resistance, support on Bitcoin. I think this is another accumulation phase. So if we're looking for levels to buy, low 90s, pretty good spots to buy. Breakouts would probably have to come with the bull market. I think that's the only hesitation that Bitcoin has right now is we just had over the last probably 2 to 4 weeks, we've had a pretty nasty correction / crash in altcoins. Ethereum took a huge nosedive over the last couple weekends. Bitcoin has been pretty resilient, which I think is commendable. But without the S&P and the Qs making all-time highs, I think Bitcoin is still just sideways. And maybe a nice accumulation zone, but a more pronounced bull run in U.S. equities probably leads to some more risk appetite in Bitcoin. Otherwise, watch your levels and be prepared for that typical volatility that we can see. But I think the 90K, like the 90K to 105, 90K to 105 could range bound for a while. I mean, 3,000 on gold, it's right there, right? I mean, we're sitting at 29.08. 3,000 seems, all but a guarantee, and we'll keep a close eye on it. But I'm long. I'm just considering, is it a spot that I should be looking to take some profit on my gold positions? I mean, it's up It's a 12.64 extended move from the 200 moving average. All of my technical indicators from momentum to overbought, oversold conditions, it's overbought with divergence, and that's on multiple time frames on the higher time frames. So yes, we can run, we could capitulate, we could have this, blow off type top, and it just keeps stretching through 3,000 plus. But I'm probably going to be happier taking and booking some profit to be on the safe side for the shares that I do own. Because I'm pretty sure I bought some shares, GLD. I mean, I've got 11 grand in profit. I bought GLD around 218. So GLD at 218, it's up 268. I'm up $50 a share. It's pretty good. I mean, you'd think I'd be trading like SMCI or Palantir to be up $50 a share, but no, I'm trading gold, and it's a gold ETF, and I'm up $50 a share. So not bad. Anyway, but if we run up to that 3,000 handle, I think it would probably be wise to protect some of that profit. The nice thing is it's running uncovered, and the rest is all just credit spreads. So probably just putting in some trailing stop losses, or putting in some lows that I can adjust. So if we go higher, put a stop loss in, goes higher, put a stop loss in. I just do this until I get knocked out. Not a bad approach. All right, Bitcoin, we're good. MicroStrategy. They had earnings, and they missed on top and bottom, but the market is still kind of pricing out MicroStrategy a lot like the resiliency of Bitcoin. So sideways right here, I need it to stay above 310 by March. I've got downside protection if that's the case. I could consider continue to roll. Maybe, I don't know, maybe another week if it's worth it. If I went out to the April expiration, maybe, but I probably don't want to take this trade into anything past July. I'm looking at this year for 2025. I'm looking at this as a really interesting first half of the year and a second half of the year. I think that look, if we're not going higher for the first half of the year, so let's say that we're sideways. Okay, let's say that the year is sideways. So from January to, let's say, like June, okay, we haven't really had any major downside. We haven't really had any major upside. We're just churning, and there's all this uncertainty every single week or every whatever. If there's not really a lot of direction, the second half of the year is going to be something. Most likely something. Obviously, the market goes sideways for the entire year, but that's probably unlikely. So first half of the year, if we're sideways, I would be bracing for a lot more volatility one way or the other. Doesn't really matter what direction. Obviously, it's easier to see the market go higher if the market can kind of get through this waiting period of all this uncertainty and how aggressive like tariffs are potentially going to hurt things or not hurt things. What's the Fed going to do by June with the rate cut? Does the Fed change its stance at all? They're doing some type of pause and restrictive, like kind of hawkish pause right now. So if I can just kind of make an assessment of where the first half of the year is, second half of the year is where I think we get a lot of movement, possibly a lot more surprises. And I don't know if those are going to be positive or negative. Having one cut in the mix is okay. But if the Fed only cuts in June and does not cut in for the rest of the year, I don't see the dollar necessarily getting too much weaker. I don't see the yields coming down too much. I think that we would be getting into that like very slow growth environment. And so right now, we have the hype of AI, but if it's hundreds of billions of dollars being spent on AI, but yet we have super high borrowing costs. I mean, if you got companies like Google and Apple and Microsoft and Amazon, and just like companies that are just flush with cash, they can afford to spend hundreds of billions of dollars. Okay. But if you are a company that needs to borrow to spend money in AI and try to grow and try to build out this AI infrastructure, if you're borrowing at much higher rates than you could a couple of years ago, that's a big difference on slowing growth. That's a big reason why this is also pretty staggering. Everyone has maybe heard the phrase or the acronym IPO, initial price offering, right? That we have like 1 or 2% of like IPOs versus a traditional like 20%. Like the IPO number this is all like messed up during COVID when everything was coming out as a SPAC or a special purpose acquisition. That used to be like the fast track way to get an IPO. All that is like dried up. Like there's like nothing new coming out, and there's very few like big publicly traded companies or IPOs waiting. it is an interesting landscape. So I just think that a lot of good stuff has been priced in. A lot of good stuff is sitting near these all-time highs. At these valuations, the market typically underperforms. It's that simple. If you look out the next 3 to 5 years, it's probably going to be an underperforming. It's going to be an underperforming window for the S&P at these valuations. So we have yet to see a meaningful correction outside of August last year. We had a 4 to 5% correction December during the holidays, but are we going to pull back 10%? Are we going to pull back 10 to 20%? It's very possible. I mean, to get me a little bit more excited about buying a dip, I've got to see a correction probably to that degree. I've got to see like a 10 to 20% correction. Otherwise, I'll play China. I'll stay diversified. I'll play gold and silver. I'll play Bitcoin. Bitcoin is still going to be a lot tied to risk appetite. If we don't see positive flows and optimism, and I mean, I think Bitcoin is a lot of good and a lot of promise and a lot of optimism, but it's going to have to require positive flows across the board. It's not going to survive on its own. Okay. So anyway, just thoughts on this year. I mean, a lot of income trades, and that's what's moving the needle for me. And the exposure I've had on China is looking pretty good. Foreign markets that are non-US, I mean, the DAX sitting here making all-time highs. Here's our rip through where's that bottom in? I mean, this is crazy. I looked at this, the same thing between the US and Europe. The DAX from this December low is just destroying the S&P right now. It is up, I think, close to 20%. Nope, I was looking for November. All right, so this low in December, right before the end of the year, we've got a 12% rip, 11.72, and we're sitting here again near these all-time highs. Here's the FTSE. Bank of England just cut rates. This same thing around that December period, that December low. The FTSE's up almost 10%. So you've got UK doing really well, Germany doing really well, Europe's looking a little bit more attractive. Argentina, that had a crazy big run, is still sideways. I'm still waiting for a dipper pullback. And then China, of course, coming out with that December low right in here. January low also outperforming the US. Brazil looking a little bit better. I have some longs there. My Mag 7 stuff. Where's my Japanese yen? Here's my 6J. Still up some profit. My Japanese future position looking pretty good. Currently up around $2,200, and not really going to close it yet. There's still some time in the trade. I do wonder, like, if I get up into this point. I mean, the numbers are funny, like 0.0067. That's all I need to see price get to. Okay. But Nikkei has really done next to nothing since our big July to August disruption. So this is still a monster disruptive event where the Nikkei is still kind of figuring out, like, what is it going to do? Hopefully the Japanese yen doesn't break the Nikkei back down. Hopefully it's just more of the same. That would be agonizingly frustrating to trade. But at the same time, if we get back to highs, is there momentum to kind of resume something to get out of this? This is like a huge dark cloud / shadow in the Asia markets right now. It was such a disruptive event. I think that the global economy is probably hoping that nothing like that happens in the near term. And we're sitting here wondering, like, what about the Japanese yen? Look, dollar yen's probably a good proxy to watch. My concern on the dollar yen would be that if we break this low, that we are going to be heading lower, right? You take a look at all your other yen crosses. So, I mean, the dollar yen is a good barometer. Look at your other yen pairs. Aussie yen. There's a couple of levels here, right? There's a couple of levels here, but this could also be setting up for a larger break. But do I trust that move? Not at all. I wouldn't be surprised if this puts in some type of low, comes back here, and then gets back up to the same highs, and we're just still stuck in a range. Then you have a high on the yen, you have a low on the yen, and we're still trading in between it, right? If the Nikkei is going sideways, then why would currency pairs be any different? So I'm not saying that the Japanese yen is untradeable, but I'm mainly focused on the Japanese yen futures and FXY where I own the shares. I think that's two ways to benefit from Japanese yen movement, especially if we have something even remotely resembling what happened last July to August. So if the Japanese yen gets stronger, I can benefit from a nice little run on shares of FXY and also my futures position, which is a nice reward to risk. I'm risking like $700 to make $1,200. But it doesn't matter if price goes to 0 or infinity. That's my risk and my reward. All right. Mag 7. So this is an easy way to think about it. Mag 7 has been, I wouldn't necessarily underperforming, but it's carried the markets for literally a decade. You got to wonder if this is maybe being held up a little bit. But I think the concern would be if Mag 7, if Mag 7 breaks down, that can't bode well for the overall markets. If Mag 7 stays resilient, right? If we just see a simple trend line break here, let's go trend line break here in Mag 7. If we break that trend line and start putting in some higher highs, right? So we have high, lower high, lower high, lower high. If we start breaking out, taking out these recent highs, Mag 7 getting back to these highs, it's probably good for the stock market. Is it vulnerable to the downside? Of course. Levels there, dynamic support. I mean, all sorts of reasons to point like, yeah, the Mag 7s on like their growth side is probably minimum. It's probably now we've gone from, exponential growth on Mag 7 now to like plateauing growth. Maybe they're all priced to perfection. They're priced in where it's like this is about as aggressive as they can be. And if that slows, I don't know if that's where the market starts to drop or the market starts to rotate away from Mag 7 into other things. But this is why equal weight versus market cap weight is going to be something really important to watch this year. Because if people are rotating out of Mag 7 and trying to put their money elsewhere, equal weight could have a pretty good run. But I think that for the health of the overall market, we still have to see our biggest, strongest companies perform really well. So time will tell. But right now, Mag 7 is, underperforming for the most part and sideways. We're down a little bit from the recent highs. Individual stocks, I mean, you can see Apple from the recent highs, it's down, right? So Apple down, 11+% from the all-time highs. Amazon, a lot of volatility here, and this son of a bee. I mean, I've got an earnings play on Amazon. We had a gap lower. I still think we have a pullback in Amazon. I mean, if we hit all-time highs, fine. I priced out an earnings trade that hopefully will see something above or below that yellow box. Google got beat up a little bit. I still think there's a lot of dynamic support between like the 180 to 170 zone. I'm really liking the income trades down in the 150 area. Meta keeps poking these all-time highs, but I think this is very much due for a pullback. So if we have a correction coming in the market, Meta easily finds the 200 moving average. Doesn't mean I'm bearish on it. Doesn't mean I'm bearish at all. But I mean that stock to me with a ridiculously high bar count. Not only the stretch away move, but a super high bar count. I'd like to see Meta pull back. That is a 507 count on the daily 200 moving average. That's a lot. On top of that, we are as high as we've been from the 200 moving average. I don't know what that catalyst is. I really don't. But technically speaking, I'd like to see price start to work its way back to that level. Microsoft, I know Alvin wanted to short it. I still like a lot of income trades here because we've had a lot of chop. I still like, putting in some creative option trades, trying to generate some income. As long as price stays above, 375, 380, I make some profit on that one. Netflix, we're trading up to 1028. I'm watching a broken wing butterfly spread. Again, we have a really high bar count in this one. Same thing with Meta. We are now 329 bars away, plus a big stretch move post earnings as well. I mean, again, I could be wrong on the trade, and I'm going to risk about $1,000. But if I'm right, it's a nice winner. I just want to see if it sticks to the mechanics of not going above 1040. Nvidia looking better on this gap fill. Pretty good technical spot. I mean, if anyone was watching Nvidia, which most people should have been, that was a beautiful spot to buy it. And that's also why I said when we had this high, that I made a little announcement and said we're probably going to hit the 200 moving average before we make all-time highs. And we poked the all-time high, but that was a sign. It's like it poked it and then it just dropped hard, and that was where the big flows came in, found the balance, and now you can see that was a much better buying opportunity. So I still think this market is eager to buy the dip. I just think we have to find the dip. We have to wait for the dip. That's at least what I'm trading. Tesla, we have to wait for probably a trend line break if you want to see more accumulation and positive flows in Tesla. Biggest rival in China, which is what? It's probably not. It's not NIO. It's probably some other like lower cost-effective EV stock. Anyway, that's it. So, 10-year yield still bouncing around. I don't know if inflation this week with Wednesday, Thursday PPI and CPI is going to do anything to the 10-year yield. It would be nice to see the 10-year going lower. I'd love to see the 10-year get below 4.5, which is 4.46 right now. But I'd like to see it stay below that. I'd love to see it get back down to, I mean, I don't know if we're going to come back to this level, but I'd love to see it back down into the, sub 4% could possibly bring our mortgage rates down into the low sixes right now. Might be wishful thinking, might not happen. But if we're sitting here between 4.5 and 5%, that is going to be a tricky growth environment where it's gonna be the governor, it's gonna be the chokehold on growth in the U.S. Okay, all right. Futures wise, fine. China, we did. Advanced decline line watching some other stocks here. Let's talk currencies for a second. I'm just going to do a spot check currency strength for the day. I'm going to let you go in about 1 minute. I've got some prep to do today, Chandler, if that's cool. So I'm going to go in just a couple minutes. So Japanese yen, a lot of volatility, weakest currency, then coming back to baseline, kind of in typical JPY fashion, just a lot of started out as the strongest currency of the day, came all the way down to the weakest of the day. Now it's coming back to the middle. It's pretty typical for a trading day, I suppose. Aussie on top today. This should be helping my Aussie New Zealand position. Yep. So my Aussie New Zealand long looking pretty good. Hopefully going to clear that high 1175. We could also be heading higher. So if Aussie New Zealand heads to fresh highs, I wouldn't mind taking profit around this like 114 area. So I may end up moving. My stop, or not my stop, my take profit up here, probably within about 30 to 50 pips of this high. So I might bump this up a little bit. But a currency pair like this, we might just see a lot of channeling. So rather than just moving the stop loss and thinking this thing's going to trend aggressively, I just let it kind of channel, hit a take profit and repeat it. And then my big sell trade on this one would be if we hold this high, look for a topping pattern to sell this thing back down to, 107 or 108. That could actually be a really good opportunity in Forex trading this year. If I get what I want on Aussie New Zealand, which would be an awesome resistance level with overbought conditions, and look for some type of topping pattern, then I think that'd be a nice swing to have. Trade it all the way back into the structure. So any type of open space like that for 300, 400, 500 pips, I tend to get pretty excited about. Okay, anything else? Aussie dollar. I'm still holding some longs. They're quite small, but I'm still profitable on the trade. I'm looking to see if the dollar gets a little bit softer, taking some profit around 6,400 on Aussie dollar. New Zealand dollar, still holding some small positions long again. Same thing here around the 58 to 58.60 level, taking some profit. Dollar CAD, no trade. What a noisy freaking currency pair that's been. Dollar Swiss, I'm out for right now. Took my profit on that one. Dollar yen, still waiting to see if we have a good gauge on where the JPY is going. There's two trades on the Japanese yen I'm watching. Either this same high, so we keep going this way, this way, this way, this way, this way, break the structure, then you can sell the heck out of this thing. Okay, or this is a low and the market's going to set up another topping pattern. Okay, you can sell that swing stop loss above the shoulder or above this swing, and then we're looking to get back down to fresh lows, possibly symmetry lows. So this sets up as a topping pattern, then possibly another swing opportunity on the dollar yen. But I wouldn't be terribly surprised to see this thing get back to the highs again. Just more of this. And then you wait for that structure to break. Like, don't force a bunch of trades on the Japanese yen. All right. Pound Aussie, pound CAD, pound New Zealand, I haven't liked in a while. Euro Aussie, Euro CAD, Euro New Zealand, haven't liked in a while. Euro dollar. I mean, again, this 105, 106 zone has been a really solid resistance. If anybody shorted that was a good opportunity to short. Stop losses above the 106 handle. If the dollar gets stronger, I think this conversation is very real that the euro dollar could hit parity again this year, with potentially going all the way down to like 96. I would be a buyer. If we hit 96 on the euro dollar, I would be a buyer. I'd be willing to trade really, really small. anticipate a bit of a price pattern and a bottoming, and then take this thing back to 105. So over the next, and look, this is how I think. 12 to 24 months from now, I think we're going to have a monster opportunity on the dollar. I think in the next 12 to 24 months, we're going to have a monster opportunity on the yen. It's just that's probably the hardest one to time. Because right now, and on those trades too, it's like trading currencies. I'm not saying I don't want to trade currencies, but man, if the brokers are charging swap or if they're basically it's negative swap positions. If I'm short the dollar or I'm long the yen, I don't want to trade Forex. Not right now, because just that little like paper cut every single day, or like that double and triple rollover that some brokers charge on Wednesdays. It just chews away, and it's frustrating to watch that, because I am willing to hold positions for like months at a time. So for me, let's say that I turn a position and I make 10 grand. Well, if I had to pay, $500 or $1,000 in negative swap, it's the trade's fine, but it's frustrating when I can make, if I have a $10,000 trade in the futures market, I can keep most of that out of my my contract commission. But if I'm getting dinged every single day for swap, that makes it a little bit more frustrating. But the trade-off is, if it's a good trade, you still make money. And usually when we start to see like an unraveling of carry trades, especially, it tends to be a lot more volatility in the market, which means things move a lot faster. So there's still ways to make money there. It's just, you got to be willing to possibly pay some negative swap. So, all right. I am going to let you go for today. So we've got a busy week. 2-day testimony from Jerome Powell, Tuesday, Wednesday, CPI, PPI, Wednesday, Thursday. We're also right in the middle of earnings season. This is a nice little snapshot for the week. Some notable ones: Shopify and Coinbase earnings this week. Let me look at some liquid ones here. I've got another. This is a good. So Shopify, Zillow, SMCI, that's tomorrow. Gilead, Cisco, MGM, Wynn, Palo Alto, DraftKings, Airbnb, Alibaba. That'll be a big one. So these are some liquid stocks I'm looking at for this week to trade some earnings. Okay, that being said, I will let you go. Have a good rest of the day, and let's have a good week. All right, thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.